Boy, do we forget, Derek, that price can go down, yield up. Is that the ultimate risk, a 50-year and 100-year paper?
Yeah, and I also think the other risk, Tom, is that maybe nobody buys it. Look, honestly, the Treasury is said to be considering this and seriously considering this. Steven Mnuchin told Bloomberg yesterday. I think it was a comment that took markets a little bit by surprise, and you saw some movement after his comments as a result of it.
Well, you're dead on, in that it went from surprise, folks, and this goes from what I'll call more measured Republicans of administrations ago, front and center, Peter Fisher, with his advice to Treasury, I would place there, and certainly Democrats as well. Who wants a 50-year U.S. peace? Who, Derek, wants that?
It's not really clear who wants that. The Trump administration is thinking about it, given the returns that you get in terms of some shorter term issuances. So there is a little bit of a push toward that. But Tom, this is an idea that's been explored for a little while now. It's been explored at least since Mnuchin's been Treasury Secretary, and they've come forward and said time and again, no, they're not actually going to do this. It's unclear what's prompting this latest reevaluation, but it's also not particularly clear that they're going to move on from what they're doing. But I think it's a surprise even that they're still considering it.
Derek, good to see you. I mean, some market watchers actually said that Mnuchin's comments were an attempt to steepen the yield curve, and we certainly saw that reaction in the 530s, although it was short-lived. Could it have been an attempt by Steven Mnuchin to steepen the yield curve?
I mean, maybe. I think one of the funniest things with the yield curve has been to see how people are sort of all over. I mean, I was hearing comments from a senior Trump administration official on another network that were interesting. I'm going to go with interesting while I'm on air. But basically saying that maybe the yield curve's moves are a sign of booming confidence in the economy. And I don't know. I mean, who knows this stuff? Really?
Yeah, exactly. I mean, I think he has said before as well, Steven Mnuchin, that the yield curve isn't that great recession indicator. But he also talked about the U.S. not intending to intervene on the dollar for now. He'd prefer any future move, he told Bloomberg, to be coordinated with the Fed and global allies. Was this Steven Mnuchin trying to put aside speculation on dollar intervention, or was it a call for help to the Fed and allies to weaken the dollar?
Yeah, I think that it was a sounding out. Let me say a sounding out. If Mnuchin wanted to be direct, I think that he would do it a little bit more in private. But there is some real question, and I think your question gets at this, about whether or not the Treasury would have any backup if they actually went and made this move. Because keep in mind, recent interventions have been in tandem. There's been sort of like this bipartisan agreement to go and do it. And it's not really clear that the Fed would intervene in a similar way. And it's not clear that they'd have sort of a dancing partner. Yeah. Remember, the U.S. doesn't have unlimited reserves with which to do something like this. So what you're looking for is more of a signal, and you have to have everybody on board if you're actually going to do a signal.